I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending July the 8th, where we had kind of a short holiday week this week and not real eventful, but not a whole lot of things to really get excited about other than some of those big feeder cattle specials that they had. Your live cattle futures for the August contract ended the week on Friday up 42 cents to end the week at 112.22. Huge basis there between it and the fat cattle market, almost $8 there. Feeder cattle on the August contract was down 17 to end the week at 143.45. Corn jumped big there late in the week on Friday, and corn just right now is just it just hinges on any kind of a weather that comes in. Any kind of a report that comes in can just take that thing one way and then the other, and almost as volatile as some of these livestock markets. But corn made a jump there on Friday, but it had been real depressed after getting pretty high up there about 3 weeks ago. It's fallen off a whole bunch. But your CME feeder cattle index ended the week at 142.92, so pretty close to what the board's trading there. Real-time index on Cattle Market Central is at 140.86 and does not benefit from some of those few of those inflated special auctions that we're not in right now, and some of those big numbers being turned in on a direct basis. But your fat cattle sold on Friday there, had a little bit of trade earlier in the week, but on Friday closed at 120 there in the Southern Plains and the Northern Plains. Didn't really have any trade out of Texas, but 120 was 2 to 3 lower than the previous week. Your dress sales late in the week were 191 to 192, which was mostly $4 lower. That basis is just staying big, and it seems like whatever spot month we're in, it's slagging way behind what your cash market is. And for these hedged up feeders, they're enjoying it for a while, but it's not a good thing. They know that they're going to give up a whole lot of market position whenever they've got a huge basis like that, even though they're getting to put some money in their pocket, $7.50 to $8 right now, to help them reach their break even. But it's really a dark cloud that just hangs over the market, and it's the promise of big losses down the road whenever we tighten that basis back up, or we start running on a negative basis, which a lot of times does happen when we get in towards the fall. So if we do see that, then we could see some huge losses coming in your fed cattle sector there. Cash feeder cattle, not really a good determination of what the market is. None of your auctions held a regular sale really. Most of your, all of your Southeast was completely closed down. They take 2 weeks off a year, once this week and this past week, and once during the Christmas vacation there. And had a few scattered regular sales. Most of the sale barns that held an auction held a special sale. And it did bring in some big prices. Green City, Valentine, Nebraska, some of those had some big sales and really netted some prices that we haven't seen for quite a while. If you look at Lexington, Nebraska there, they had a big sale on Friday there and had some good prices. You look at these string and 9 weights on Cattle Market Central there, they all bring in from the low to mid 140s. And that's kind of where we've been talking, is a 900-pound steer at 140. Still a lot of them out in the country coming off grass, and some of them need to come off really quick that have yet to be sold. But this big jump here, your sales out in the country are probably not going to net what you're getting in the auctions there. There's not any competition for one thing, but also if it's in an auction that gives a good way up that's in the buyer's favor, they're going to give a little bit more there too. But so it's yet to be seen whether it's going to help some of these last minute sales on these double stock pastures out of the Flint Hills and the Osage reach over 140 on a 900-pound steer, or it might just help them get 140. But also there could be some of these cattle coming up on the big videos starting out early this week. So it could help. It's a shot in the arm to the feeder cattle market and could help some of these fall delivery calves and these big yearlings that are selling for right now. But kind of had a short week in the markets. Wanted to talk a little bit about something that I see coming down the road, and I hope that you guys are looking at it too, and that is how fast this cattle production is going to the hogs. And I mean that by you know, years ago, and not that many years ago, but maybe 20 years ago, especially in the Midwest, most all your cattle producers, especially your cattle feeders and farmer feeders in the Midwest, fed a few hogs. It helped them make ends meet, and a lot of times the hog deal would be kind of decent and would hold things together if your cattle were down or vice versa. But if you remember back in 1998 when hogs went to nothing, and it just cleared everybody out, took everybody out of the hog business besides the packers and the big corporate outfits. If I remember, I was reporting the markets for USDA up in Pennsylvania at that time, and had a guy that I respected quite a bit at that time that bought a lot of cattle and fed a lot of cattle and fed them out in Kansas. And he come in, wanted a hard copy of that report the day that hogs got down to 8 cents, 6 cents in some places, but your nationwide market was 8 cents that week. He wanted a copy of that, and he said, I'm just going to keep that. He said, that's the end of the hog business for most of us, and he was right. It never did recover. People that grew pigs and sold feeder pigs, they went out of business. Most of you people that fed hogs, they all quit doing that. And the only time you see any feeder pigs or hogs right now out in the open or on any kind of an open market is maybe a show pig or something. But the hog business has completely gone to the corporates. Okay, so how long before that happens to the cattle business? It's getting closer and closer and closer all the time. I've looked at some articles when I was thinking about doing this. A friend of mine, analyst Don Close, he talked about it a little bit early this spring, quoted there that there's been 32 million acres less available pasture land just in the last several years here, and we are losing a lot of pasture land. We lost more of it when corn was real high there a few years back, when they broke out a lot more of this pasture land into corn. But we're just losing it due to attrition, urban sprawl. A lot of these people that got a lot of money that are looking to do it for an entertainment value, either through hunting or fishing or taking pictures or something like that, they're buying up more of it and kicking the cattle off. But we're losing a lot of our pasture ground that way. But what scares me even more is the way that our cattle feeding industry has just gone totally corporate. This vertical integration, which ends up with the packers and the meat sellers there. They're feeding more cattle all the time. They've got a bigger control of captive supply. But you look at this breakdown of negotiated cash sales, which ended the end of last year, 2015 there, that in the 5-area feeding region there, negotiated cash sales amounted to only 21.3%. Now the rest of those were either were just cattle that were never really for sale out on the open market. But whenever packers only need to buy around 20% of their cattle to fill the kill, which is basically what this says, you're not going to have any leverage at all. And for an independent feeder, a farmer feeder, a custom cattle feeder is trying to sell cattle, it's just impossible to get any leverage. It's impossible to stay profitable on a consistent basis. You look at 10 years ago, and the year ended 2005, there was 55.8% of cattle sell on a negotiated basis. But it's really bad. It's gotten worse down here in Texas. I remember growing up in this area in Hereford, Texas, had around 20 custom cattle feeders, and now there's really not any custom cattle feeders down in this country to speak of at all. Most of your dairies that have come into this country have bought up these feedlots that went out of business or closed up. They're growing heifers, they're raising baby calves in them. You've got a few big corporate feedlots around, or outfits that are in cahoots with the corporates, and they're feeding all the cattle in this country. And you look at the breakdown in just the Texas Panhandle, Oklahoma Panhandle feedlot areas, only 2.6% of the cattle in that area were sold on a negotiated basis. That is just ridiculous. That was the last calendar year. Kansas had 12.5%. Nebraska had 32.6%, which is still not very good. Now you look at the farmer feeders in Iowa and southern Minnesota, up there in the Iowa area, 56.7, which is kind of respectable. You can still kind of get a little leverage together and hold the market, even though they don't feed as many cattle as they do further west and down south there. But The biggest thing that you're seeing now is some of this cow-calf production being held in confinement areas. Now that is scary, guys. If you want this cattle production deal to last for your kids and your grandkids, don't support this confinement of cow-calf beef production. It's really the beginning of the end. And you hate to see it. You know, they're raising these cows in hoop buildings, they're raising them in feedlots, or raising them in big traps. And the more that happens, then those corporates can get a hold of that. That's the only thing that's been keeping it back before, is it took a lot of ranch country to run cows and calves. Well, if you take that away from the industry, then what do you got? You just got total vertical integration where they can just increase it, lower it, and just completely dominate. If you've got somebody that owns a packing house and sells meat, that owns baby calves, stocker calves, bigger stocker yearlings, and all the way through feeder cattle and the whole thing, that just cuts all of us middle guys out. Cuts everybody out, all your cattle production guys. But really hate to see it. If you think that's bad, what's that? That's going to give PETA even more reason to get down on cattle production. If they see those mother cows standing out there having baby calves and muddy lots and things like that, that's gonna give them a lot of fuel to really push down on this beef deal, and we hate to see that. What's your ranch values going to be? Your pasture land value is going to be if more and more of our beef cattle production goes into confinement areas, and it's just not a good thing. If you see it happening, don't support it. Be aware of it and just keep your eyes open, because it's a bad thing going down the road. But here at my home office in Canyon, Texas, working for DV Auction, we'll talk to you next week.